If there's a default and they're not willing to cure it, we basically crush the equity and then we become the equity and own the business. We're a lender. We have a whole operations group that's designed to do just that, but that is not the preference. The preference is that we work alongside a sponsor. So we want the equity support, but we will deal with a company, a sponsor, if they're just going to stay in and be a loud voice at the table.
So, at the risk of looking like a complete ignorant idiot, Capital Southwest, do you have billions of dollars in your piggy bank? I come to you and say, "Hey, I need 50 million," and you write me a check, or is it a case of I come to you, I need 50 million, and you're like, "Hey, this is something that I want to do. Let me go find some people that want to partner with us on this deal."
So our balance sheet is available to make deals. So we have, multiple credit facilities. We raise corporate bonds, convertible bonds. We have licenses with the government for SBIC lending. So that's smaller
Mhm.
businesses. So the answer to your question is we have about, $500 million in capital available right now to write checks. And then we trade, in the public markets, and we trade at a considerable premium to our book value. And so every day we're raising capital on what we call an at the market program or an ATM program, which just means we sell shares every day to institutional retail and raise capital, $5 and $10 million at a pop.
But it's not raising capital for a deal specific.
No,
You're raising
good.
capital essentially for the entire company of Capital Southwest.
Well, yes and no. We want to have enough dry powder available either through cash or undrawn credit facilities for at least a year activity, right? So that's going to be, we're going to want to have, 500 million. And then we also are managing leverage because for Capital Southwest, right, we raised equity and we also raised debt. We prefer to be the company to have is basically leverage it 1-to-1 debt to equity. So for every dollar we invest in a business, it's usually we're going to raise $1 of equity and $1 of debt and put it in that $2 to work. But if we were to raise a number of deals and do it with debt only, right? Then we'd then have to go to the equity markets and raise money. But we do this simultaneously to sort of manage that leverage 1-to-1 at all points in time. So it's available either through debt or through equity. And then again, we hit the bond markets, and many in our space do, once or twice a year. And we're investment grade through Fitch and Moody's, which allows us to raise capital. I don't want to say fairly easily because it takes a lot of plane rides and a lot of conversations. But we built a reputation and due to our performance that we have the ability to raise, $500 million in a 2-week process.
But essentially, if I give you a dollar, it's not going to a specific project that's laid out right then and there. I'm giving you a dollar with thinking that, hey, I'm trusting Capital Southwest to do Capital Southwest things and make that dollar worth more.
Perfectly said.